I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade. It is Tuesday, June 30th, end of the month, end of the quarter, and we did have a USDA report out here earlier that provided a lot of fireworks to the grain market, specifically corn and soybeans, getting some friendly numbers. Corn specifically, a big drop in the acres. The average analyst estimate was right around 95 million acres. The USDA came in with 92, and thus the short covering rally that we saw through the afternoon's trade. And over the weekend we did a tech talk talking about the bears being in full control on the technical breakdown last week, and the only thing that we said was going to change our mind or neutralize the technical landscape in the near term would be a conviction close out above trendline resistance at 340, and that's what we got today. So the bears are out of the driver's seat. The bulls have a little bit of an advantage, but all in all, we're still just kind of in a range here. The bulls really need to get out above the psychologically significant 350 area to 355. This also represents previously important price points, and we talked about that in this past weekend's Tech Talk as well. Using some different charting strategies and looking at previous price points. And the KISS strategy, keep it simple, stupid. Using previous price points is a great place to start if you're new to being a technician on the chart. So 350, this was previous support. The breakdown point, that's now going to be resistance, and I think a huge line in the sand for the bulls to get out above. If they can achieve consecutive closes out above here, perhaps we spur additional short covering and momentum traders start to pile on, and we could see this market accelerate another 20 to 25 cents in a relatively short amount of time. Now, with that said, the fundamental headwinds ahead of us, I think, are still going to be a little bit of a headwind, but that's what we're looking at, a bit of an inflection point as we head into a long weekend. Now, moving over to the soybean chart, we talked about this over the weekend as well. We talked about 860 being an area where we see a lot of value, especially from a risk-reward perspective, and we talked about it being an inflection point. A break and close below 860 would put the bears in full control. We avoided that on Monday, and we got a nice little rally today. Now, the bulls still have some work to do. Today was a heck of a day, don't get me wrong, but we're right back up here at the top end of the range, all the way back to March and April. So we need to see a close out above this 880, 885 area. If we can do that with some conviction, I think you spur another leg higher. And the next line in the sand that we're looking at, well, we can go look at some previous important price points, and this was support, the breakdown point, and psychologically significant $9 handle. So if we can get out above 882, 885 on a closing basis, I think this market has additional room to run to the upside. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. And remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.